We'll talk about the stock markets and others. Let's get a sense of the market with Olalekan Olabode, who is the head of research at Vetiva Capital Management, joining us via Skype. Good morning, Olalekan. It's good to see you.
Good morning. Thank you for having me. Yes,
it's good to have you on the program. Well, look at the fundamentals for the market for the new year. If you look at the numbers right now, it looks like not a very nice way to start a new year, as it were, considering where we finished off last year. We struggled, isn't it, on the equity side?
Yes, we did. We did significantly. And that was like the third consecutive decline for the equity market. That's in the last 3 years.
Yeah, so what do you think the fundamentals would look like for 2017? Of course, we're going to hear from the stock exchange sometime next week, Thursday. That's what's scheduled for the 12th of January, what the 2017 would look like. But from your own side, from an analyst point of view, what do you think the fundamentals will be? Is it the currency? Is it the debt market? Is it fiscal policy?
2016 was a tough year generally, and we expect that 2017 would also be relatively tough. When you look at the capital market in general, the equity market and the fixed income market, both markets have not started yet well. The equity market is down over 1% just in the first two trading sessions of the year. And the fixed income market has also traded mixed, with the T-bills markets seeing some modest bullish demand, and the bond market has actually we've seen more sell-offs from the bond market. But I think the most important thing, particularly for the fixed income market going into 2017, would be what we see from the fiscal authority and the monetary authority. Going by what the budget proposal is, we expect that we're going to have a trillion budget deficit in 2017. And it's expected about 56% of that is going to be raised from the domestic market. So overall, we expect about 1.3 trillion in this particular calendar year, and that brings us to about 115 billion monthly issue across the year. So if you compare with what we had last year, we had an average of about 100 billion monthly bond issuance last year. That's about 15% higher than 2016. So it probably shows that we are likely going to see pressure on yields, particularly due to higher increase in borrowing and, of course, the borrowing costs, as we expect.
May I cut in very quickly? We have about 2 minutes. I'm sorry, with due respect, I have little sympathy for you folks at the fixed income side of the market. Because you folks made about 20%, 18% last year. So you guys had a nice time, and you've had that for a number of years. I'm worried a little bit about the equity side, where things are still really, really on the low end for 3 consecutive years. So tell me, where's the stimulus for the equity side of things in 2017?
I think it's going to be a relatively tough year for the equity market in 2017. However, we expect that we are going to see modest gains this year. If you look at the equity market in the last few years, the performance of the equity market is strongly correlated with oil price performance. And unfortunately, for 2016, we had a strong rebound, or modest rebound in oil prices, but we didn't see that reflecting in what we saw for the performance of the equity market. And that's largely because of the FX pressure that we saw in the market. We expect that the FX pressure is still going to persist in 2017. However, I think the hope for us this year is also the continuous rebound in oil prices. We've seen oil prices as high as $56, $58 per barrel in the early trading part of this year.
Okay.
If we see, yes.
I'm sorry, I have to cut in there very quickly. Respectfully, yours. I am boasting of you. Thank you very much, Olalekan, for coming there this morning. Olalekan Olabode, we appreciate that. We apologize for that. I'm sure it's a very long conversation. We have 360 days ahead to discuss the state of the market. So let's keep it there for today from Vetiva Capital. Thank you very much. Let's come back after the break and switch things a little bit to the agri commodity side. Cocoa prices is down, but if you look at the commodities markets, related stocks on the market, very quiet year. Let's have that conversation after the break.